Hi everyone, welcome to today's video. Today's video is about interest-only loans and the changes that are coming in the Australian loans market. So think about your home loan and your investment property loans, to all of you out there. Do you have an interest-only loan? Now, an investment-only loan is typically used for investors who invest in real estate, properties, for example. The point of an interest-only loan is that you don't repay the actual loan balance, you pay interest only. Why would you do that? Well, for investment purposes, you usually don't repay a loan often until you sell the investment property itself. So in that time, you just pay the interest just to be able to have the benefit of using that money for the investing into property. Some home loan owners, however, as in having a mortgage on your home where you live, they may also use interest-only loans. Not frequently and not usually recommended, but perhaps in a time where people want to, for example, reduce their expenses for a temporary period of time. They may have changed their home loan to an interest-only loan instead of a principal and interest loan. So therefore, their repayments decrease quite substantially because they're paying interest only to the banks, and that may give them a reprieve from their cash flow problems, for example. So if you have had any problems in the past with your finances and you did change your loan to interest only, then I'm talking to you especially out there, because there are some changes coming in the Australian market. Since 2014, the Australian government and the Reserve Bank of Australia, they've been tightening on investment loans and loans in general, but particularly investment loans. They've been trying to get Australians to reduce the amount of their borrowings because, quite frankly, Australians borrow a lot of money, not always for the right reason. We've seen in the past few years that investment loans have been tightened up for people that live overseas, as in Aussies living overseas, or investment loans for Aussies living in Australia have also tightened up for investment purposes. The banks are trying to get the ratio of investment loans to home loans down a little. So that's been occurring. The latest change that we've seen though, however, is the focus on interest-only loans. Now, like I said, this will affect a lot of investors out there, property investors who have interest-only loans, but it will also affect any of you out there that have a home loan, which is interest-only as well. What changes do I mean? Well, usually when you have an interest-only loan, the interest-only period is for a set amount of time. Usually it's about 5 years. After that time, the bank or your lender will write to you and say, your interest-only period is expiring. Would you like to roll over for another term? Yes, you would. Usually tick the box and it's done automatically. Nothing changes to your interest payments and you just go on with it. Now, the changes that are coming are that the government and the RBA want people to stay away from interest-only loans. They're really trying to convert people that already have those loans over to principal and interest loans, and they're not granting as many new investment interest-only loans as they once were. What will that mean for you? That means that if you have an existing interest-only loan and your period of interest-free period is coming up to renewal, say in a year or 2 or 3, your bank will basically make you reapply for the loan if you want to have an interest-only loan. That means they'll look at your income and expenses. You have to basically apply for the loan all over again, which could cause problems for some people, particularly if you're an investor with several investment properties, or you've had your changes to your personal situation, such as change of job, change of income, expenses. Perhaps you've had kids in the last few years, that type of thing. It could make applying for an interest-only loan quite challenging or even impossible. It depends on your situation. But it'll also mean that for those people that can't reapply for an investment interest-only loan, or people that have a home loan which is interest-only, the banks are going to likely flick you over to principal and interest repayments. So that means your repayments are going to go up. Let me tell you, this is going to be a substantial change to your loan repayments. That's because no longer will you just pay the interest, you will be forced to start repaying the actual principal loan balance. So if you're an investor with several investment properties and your cash flow is great at the moment, but all of a sudden you have to start making loan repayments off the actual loan, that's going to hurt. If you're a home loan owner and you all of a sudden have to go from interest only to principal and interest, that's going to increase your repayments by a lot. On average, for an average $400,000 home, for example, a $400,000 loan, that will increase your repayments by about $7,000 a year. That's about $135 a week. So all of a sudden, you're going to need to find an extra $135 a week to be able to start repaying your home loan. That will have an effect on most household budgets, but is an intentional change by the government and the RBA in order to get people to lower the amount of money that they're repaying. Now, It's estimated that there's about 2/3 of the interest-only loans in Australia are going to expire their interest-free period by 2020. That's only a few years away. So you might be in that situation. What your options are, okay. Speak to your loan provider first of all. Find out if you have an interest-only loan. If you do, then your options are to refinance the interest-only period. That will only occur if you can successfully apply for the loan all over again. And if it's your home loan that is interest-free, it's pretty unlikely the banks are going to offer you to redo that. They're going to want you to start paying down that loan. So your other options are build up your savings between now and then. If you've got a couple of years before this change is going to affect you, don't stick your head in the sand. You want to get on top of it now. Build up your savings account, build up your offsets account so that you can then fund that extra $135 a week, for example, from your savings initially until you can jiggle your budget to give you some wriggle room. You can also decrease your expenses, of course, to be able to afford these repayments that the banks are going to take from you. You're going to need to pay them. So look at your budget, cut down on expenses, and you know what? Just make it work, because you're going to have to pay it. There's no choice about it. It's going to need to be paid. And final option is sell the property. It's coming, the changes are coming. If your budget can't afford those extra payments, then you're going to have to sell your property. You're going to have to get your loan balance down somehow. So if you can't do that by making extra payments or getting it down some way, you're going to need to look at selling your house and perhaps downsizing. That's the only other way to do it. That is going to cause a lot of problems for people that are investors. There's a lot of talk about perhaps, you know, if all of a sudden that happens and there's people with several investment properties having to sell their properties because they can't afford 2 or 3 or 4 loan increases, there's going to be perhaps a fire sale on properties from the investor's point of view. So, you know, keep that in mind if you're looking to invest or if you're already a property owner. And yeah, if it's your own home, then you're going to have to do the figures, speak to your loan provider, speak to your bank. And unfortunately, if you can't afford to repay the size of the loan that you have now, as in principal interest, you're going to have to look at selling that and downsizing. So sorry for a little bit of bad news there, but I just want you to know that these changes are coming. There's no point ignoring it. It's already happening to a lot of people. I've got a close friend of mine, their loans already switched to principal and interest. And let me tell you, it's hurting their budget because they weren't expecting it. So thank you, government. Thank you, RBA. Maybe these changes will change again in the near future, but for now, the changes are coming. So just get used to it because it's happening whether you like it or not. Stay tuned for further videos. Bye, everyone.